Joining us now is Peter McGuire, the CEO of XM Australia. Peter, hi, thank you for waiting by. How are you guys reading into what's going on across the key global markets? What is the, sense you're getting?
Well, Karunya, a couple of quick things. I think the massive move to the upside as far as crude over the last matter of, say, 24 to 48 hours has taken everyone by surprise. So we're knocking on the door. I've got the screen here. We're knocking on the door of 100. I think the mood as far as sanctions being imposed or certainly talking about from numerous European nations towards Russia are going to be very interesting how that plays out. We've got a war strategist, as we know, Mr. Putin, and you've got the overall nervousness, US equities and global equities, I'm feeling will have a continued softness. So that's what every trader's looking at, and a stronger US dollar at the moment. I think 96.2 for that US dollar index will probably creep up a little bit further.
Peter, I have a question for you. So in the overall emerging market landscape, where does India stack against, let's say, China, for instance?
Well, if you're looking at equity markets, I think it could be a sell-off for a number of those. So I don't think anyone's going to be immune from it. From a dependency as far as oil prices, I think India will feel it more than China in a lot of ways, in the sense of price at $100 barrels of oil, or if it goes up to 110, that's certainly not a good point for any emerging market, and certainly no country like India. So I think that's the story there. We've got ratcheting up as far as rate rises this year in 22, and the Fed with two hands on the wheel saying, are we going to see 7 rate rises? So all of that factors in with higher energy costs, higher gold prices, more uncertainty, and I think, higher food prices across the globe. So 22 is going to be a very, very interesting year, a volatile year and a dynamic year from a trading perspective.
Can this war tension make markets like India more attractive to foreign investors?
I think they'll make them more attractive. I believe, and no doubt the global strategists believe and investors believe that India, its decade and really its century, we're right there now, that sweet spot. So overall demand, the brilliance of not only the nation, but it's an incredibly young population, and the rebuilding of cities and motorways and infrastructure. So the storyline is one, I think, a very much blue sky for India, and it positions so well for this decade and really for the next decade onwards, as long as commodity prices don't outprice themselves.
Okay, Peter, do you see the FII trend improve? I mean, from October until Jan, things were quite bad as far as Indian landscape was concerned. Feb onwards, yes, things are looking up a tad. But how do you see the trend playing out? Any word on that?
No, I don't. I think that just the overall consensus is that there's going to be nervousness across a lot of markets, that there's a sense of, I think, trepidation from the retail investor. They've had an enormous rally over the last year and a half to the upside, and everyone's made money hand over fist if you've been a trader. So at the moment, I think it's just a little bit of nervousness sweeping across pretty much the world. Interest rates rising, as I mentioned, higher energy costs, food costs, and sell-offs as far as equities that could continue in the short to medium term. So these storylines as far as war really create, I think, a lot of nervousness to investors and certainly to nations. Let's not forget 48% of Chinese demand, or pardon me, European demand for natural gas comes from Russia. So that's not a good sign to put sanctions on them, especially in winter.
Right. Okay, Peter, great getting in some perspective from you as well as far as the global setup is concerned and how India could be viewed amid all of what's going on. Thanks for joining in.